Welcome back, everyone. Michael here with Offshore Citizen. Today we're going to answer a question from one of our viewers. Ellie Ackers asked how U.S. citizenship-based taxation works. What is the rough overview of what U.S. citizens need to know about having dual citizenship while living abroad when it comes to income taxes? So in general, I'm going to discuss with you today the subject of what are the consequences for U.S. citizens of living abroad versus other people. And so we're going to dive into that today. I'm going to kind of give you a basic overview. There's always details that you should be aware of. And of course, these things are things that specifically apply to Americans. Then there's all the things that apply to everybody else, right? So before we do that, please already, if you haven't already, please hit the subscribe button, hit the nail the notification bell. We really appreciate your support, so appreciate your subscription. It very much helps us out. And if you'd like to check out some of our other videos, we try to produce great content, try to organize them into playlists for you, so go back and check that out. And if you'd like help with moving abroad, with setting yourself up internationally for your business or yourself personally, please reach out to us. You can book a call with me, calendly.com/Michael-Rosmer. There's a link in the description below, or send us a message through our websites, offshorecitizen.net and offshorecapitalist.com. Okay, diving in. All right, so for those of you who aren't familiar, very quick recap. Americans are pretty much the only ones who have citizenship-based taxation. What does this mean? What I sometimes hear people say, in fact, I was having dinner with somebody yesterday who said, they have worldwide taxation. It's like, well, this person was from Sweden. Swedish people have worldwide taxation too, so do Canadians, so do Brits, so do most of these. However, it's not citizenship-based, meaning that for Americans, you are always tax resident so long as you have your US citizenship, okay? This is mostly unique in the world and really kind of unjust if you ask me. Kind of the opposite of the no taxation without representation kind of mindset that got them into it, because here you're not getting any benefits but you're paying for it, or you're getting minimal benefits and paying for it still the same amount. Anyway, what does this mean for you? What this means is regardless of whether you move abroad, unless you renounce your US citizenship, you need to file US taxes. This means you could be a dual Canadian-American living in Canada, having nothing to do with the US, you still have to file US taxes. You could be married to an Italian person, as one of my clients who I was talking to recently is living in Italy. Husband not able to actually come to the US and yet still subject to US tax. So lots of different scenarios. The point is there is no place you can go that will get you out of that obligation to file and pay accordingly. Along with that are some other obligations, such as something called FBAR, foreign bank account reporting. And this is probably the most onerous. I would say that of all the things that you need to make sure you follow as an American, it's FBAR. This means that you have to report all of your foreign bank accounts over a certain dollar value. And if you don't do that, the consequences of not doing so is that they will penalize you 50% of the value of the account for every year that it's not reported. To give you some idea of how draconian this is, there was a guy who had a Swiss bank account, about $750,000, and it didn't report it for 4 years, decided, hey, listen, I want to get caught up and report it. They fined him $1.5 million for not reporting $750,000 because it was half of the $750 each year for 4 years, so approximately $375 multiplied by 4. He fought it in court and he lost. So just crazy, like totally unrealistic fines for that. So that is like the number one thing that I would say, make sure you're reporting your foreign bank accounts. Unfortunately, what this means is that you may have trouble opening up bank accounts in other places, or you may have restrictions on, say, mutual funds and other issues. For example, there's a lot of Canadians who, they were born from dual parents, like Canadian American, and now they're US citizens, but they've never really lived in the US, etc. And they start trying to contribute to retirement mutual funds, etc., and they have issues. Maybe you're married to somebody who is like that and similar problems, right? Because you have a joint account, you may have problems. So this is a really unfortunate thing. It's one of the things driving a lot of people to want to renounce. It's one of the reasons why the number of renunciations have gone up since the introduction of FATCA, which is the Foreign Account Tax Compliance Act, which basically made all the world's banks reporting agents for the IRS. Okay, so not so great. In addition to that, or maybe on the bright side of that, there is foreign tax credits available for Americans, meaning that if you go and live in Sweden and the taxes are higher in Sweden than they are in the US, you pay your Swedish tax, you can get a tax credit for the taxes paid in Sweden, and as a result, you can get that back. Unfortunately, This only works when there's a match of the types of taxes. So for example, if you look at Switzerland, Switzerland has kind of a wealth tax, and that wealth tax doesn't have an equivalent US tax. You can't actually get tax credits against it, which really drives where you may want to live and kind of makes it less attractive to live in certain places such as Switzerland as an American versus some other places, okay? The other thing is Social Security, and this can become a little bit of a pain. Often you have to do Social Security contributions in a foreign country, and you may have to do them in the US as well. If, for example, you have a US company that's paying you and now you're subject to payroll taxes, but maybe you're also subject to Social Security taxes in the country where you are, there's something called totalization, I'm going to mispronounce this here, totalization agreements, which are designed to try and prevent that double impact of Social Security contributions, but the network of them is not so robust, and you just don't get, it doesn't work nearly as well as tax credits. The good news is that Americans who are not living in the US for more than 330 days per year, or there's a few other criteria, you can have this bona fide residence test and things like this, but can qualify for something called the foreign earned income exclusion. I've done some videos on that in the past, or talked about it in some videos on how to do international tax planning for Americans, so you can go and check that out. It allows you to have approximately $110,000 tax-free of US tax. So if your income is lower than that, then that's good. If you're a couple, maybe you have a business and you can pay each of you, so now you're at around $220,000. Maybe you can take some expenses out of the business. There's also a housing allowance that can be there. So you can potentially get up to, $150,000 for a couple, $250,000, $300,000 that you get tax-free living abroad. Now, unfortunately, that doesn't mean you won't be taxed in your home country, in the country where you're living, but let's say you're living in UAE or Monaco or St. Kitts and Nevis or Bahamas, someplace that was zero tax, you could then end up not paying the tax in the US and not paying the tax in those countries. So for people who are kind of below that $300,000 a year threshold, especially if it's coming from business income, then that can be a pretty attractive way to go, all right? So these are some of the more important basics. So just to rhyme off again, you need to make sure you file your tax return every year. You need to make sure you do FBAR every year, super important, right? You need to pay attention to whether you can get tax credits for foreign tax paid. It's an important issue. You may be able to qualify for the foreign earned income exclusion. That can be helpful. Beware of how you're getting paid from the perspective of Social Securities, so you don't get hit with those double, because that can make it much more complex. And be aware of the types of taxes in places that you live, because they may not overlap with US taxes, and therefore you may not get credit for them. So that's just like a basic overview. If you want to discuss more details, first of all, if you have something specific that comes to mind, please put it in the comments below. Otherwise, if you're interested in specific questions, reach out to me, or consult a US CPA or something like that. And yeah, I'm going to look forward to seeing you guys on the next video.